I think yesterday there was an interview with or today, the CEO of the Serum Institute of India, who is very close to the Astra vaccine, saying that the 90-95% efficacy that we've been seeing is to do with the time difference between the first dose and second dose. 2 to 3, those who received it 2 to 3 months apart may be showing 90-95% efficacy. But I'm worried about this comment. I hope that there's solid data behind it.
Well, there are suggestions that maybe some of this process has been rushed. Are those concerns valid?
Certainly not with regards to AstraZeneca. I mean, you know, they had their first data back in November. So whoever's assessing and looking at this data is taking their time to analyze it. The problem is, Guy, when you run a clinical trial, statistically speaking, you should set up your hypothesis at the beginning of the trial. And if your hypothesis gives you this answer, you can't then go inside the trial and keep digging for data that is more pleasing. That is a problem. I'm not assuming that's what they've done. But so let's reserve judgment until we see the data. And I do understand that we're dealing with a very difficult pandemic.
Sam, just in terms of the impacts that the AstraZeneca vaccine could have in terms of distribution, can you just walk me through the mechanics and how much simpler the mechanics are associated with this vaccine? It can be stored in a fridge.
Oh yeah, much simpler. My local GP in the village that's got 300 people can manage to store it. So this makes an enormous difference. We just have to make ourselves comfortable as to the efficacy of this vaccine. And frankly, even at 70% or 60%, it's still a powerful tool, given that it reduced the severity or severe disease by very serious, close to over 90%. So I'd be happy to see that. We just have to be very careful how we position it and make sure that we understand the data and it's supported by solid analysis.
In terms of how this will be rolled out around the world, this is a vaccine, as you said, that can be stored relatively straightforwardly. It will remain stable. You mentioned the Serum Institute in India. When are we going to see approval from that institute? Because they have the ability there to really churn this vaccine out and start really having a big impact globally. Are we going to see a kind of UK goes today, potentially the Serum Institute goes tomorrow?
I think that's perfectly possible. I mean, they've been working on this vaccine independently almost for several months. So I'm assuming that given their expertise in vaccine development, I'm assuming that they'll be very close to the UK, if not within a day or two, perhaps within a week or so. So I'm assuming that will be the case.
Sam, always a pleasure. Thanks for the update. Sam Fazeli of Bloomberg Intelligence. We'll carry on the conversation a little later on in the hour as well. We're going to speak to Emma Shadolja, Johns Hopkins Center for Health Security Senior Scholar. Looking forward to that conversation. This is Bloomberg. Welcome back. This is Bloomberg Surveillance. I'm Guy Johnson in London. Francine and Tom both have the morning off. Let's talk about where we are with the markets. So equities continue to be bid. Looks like we're going to see equity markets both sides of the Atlantic sort of pushing higher through these records. Yesterday, records for the DAX and also stateside on Wall Street. S&P futures currently pointing higher by around 0.5%. The FTSE 100 back with a bang this morning, pricing in the Brexit deal. It was closed yesterday. Euro dollar 122.46, so the buck a little weaker again this morning, and crude catching a bid. In the bond markets, US yields are higher. We're trading spot 94.30, but yields lower in Germany, which is interesting. We're down by around 8 basis points. When it comes to the Bund. Joining us now, Chris Rupke, MUFG Union Bank Chief Financial Economist. Chris, thank you very much indeed for joining us this Tuesday morning. Let's talk a little bit about what is happening stateside first. There is a debate in Washington as to whether or not $2,000 checks are more preferable than $600 checks. The president and Nancy Pelosi backing the former. Mitch McConnell continues to back the latter. If we were to see $2,000 checks delivered at this point, what impact would that have on the bond market? And would there be a danger that we're actually getting to the point where we could start overheating the US economy into 2021?
Well, the bond market's very psychological. If people start talking about this is going to cause an overheat of the economy, maybe 10-year Treasury yields do start drifting up to 1.25%. I think almost every economist on Wall Street has the 10-year Treasury yield going to 1.25% by the end of 2021 anyway. It probably wouldn't take all that much. You know, one of the key things here is whether or not these paychecks, these economic impact payments, will actually be spent by the consumer. We had a payroll tax cut back in 2011, 2012. It injected about 120 billion each year into the economy. Economists to this day can't find any effect on the economy. Consumer spending didn't go up. And plus right now, consumer spending is going up in so many categories. It's just not going up in leisure and hospitality, sporting games, Disneyland, hotels, motels, restaurants, and bars. So yeah, it'll be very, very interesting. The $600 billion, the $600 checks right now, that's about 150 billion, call it. The real economy is about 18.5 trillion. So if it's spent all in the first quarter, it'll boost GDP on its own, the $600 checks by 3.2%. So that's a big chunk already just with $600, and you're talking about tripling that.
We could go even further, potentially, Chris, further down the road. We're watching to see what the result of Georgia will be. If we were to see the Democrats winning, you could see the party under Joe Biden potentially delivering a much, much bigger fiscal stimulus plan in the early part of the administration. Is it possible for market participants to really accurately gauge what 2021 is going to look like in terms of the dynamics until they can find out which way Georgia jumps?
Yeah, it is. I hate to put it down to one election or two elections. I mean, it's pretty close right now, the Senate. Maybe Biden could reach across the aisle and pick up a couple of votes on on some of the measures. But you're right, trying to reverse some of those, the biggest quote unquote corporate tax cut in history, that would be a problematic for the stock market rally. You know, we do have some risks out there. It looks like an asset bubble is brewing. Fed Chair Powell said he didn't see one at the most recent meeting in the Q&A there. But, you know, I would say, let's say S&P 500 or maybe the Dow Jones Industrials are up about 65% since Trump was elected back in November 2016. About 20 percentage points of that 65% rally, almost a third of it, was due to that corporate tax cut. You know, companies didn't make more money. They were given more money by the government. Their tax load was reduced. So there's quite a risk there if this administration that's the most business friendly, arguably, goes away and a new administration comes in. There's a risk, I think, for asset prices.
Yeah, it'll be interesting to see whether it's going to be interesting to see how symmetric it is. If it carries on, will the Fed be worried about financial stability? If the Biden administration kind of steps on the tax side of things, it'd be interesting to see whether or not that reduces the investors' desire to put more money to work. What about kind of the portfolio construction in 2021? You have already suggested you think most economists, most market strategists think that the yields do go higher, i.e. bonds go down. In terms of portfolio construction this year, Chris, is it better to think to hold cash or bonds as my equity counterweight?
Gosh, that's a real dilemma, isn't it? I see a lot of risks out there. I don't feel very comfortable, owning a lot of market-based assets like stocks or bonds. I mean, bonds probably aren't going to be the same hedge, at least in the coming year. You know, when you buy a 10-year Treasury bond and yields go up, you certainly have a mark-to-market loss that year, which erases your interest income. But, you know, theoretically, if you're a long-term investor, you're holding the 10-year Treasury for 10 years and you're not going to really lose that money. It's an opportunity cost loss there. If you're a long-term investor, I guess it's still okay to be in bonds and pick up a slim coupon that right now that's less than 1%. But I don't know. I'm more nervous than I've ever been. I'm part of the baby boom generation. So I'm a little more concerned about having assets in the stock market. Right now, the baby boom generation is 57 to 75 years old. And if you think the nation's finances aren't on a sustainable path, as now Treasury Secretary incoming Yellen used to say, just wait till the baby boom retires over the next 20 years. You know, they're going to need a lot of Social Security and Medicare. The national debt right now is almost 27, 28 billion. You know, it's on its way up with the baby boom retiring here. So I'm concerned about market-based assets at this stage.
Chris, and on that note, we will leave it. I suspect a lot of people will pay attention to that. Chris Rupke of MUFG Union Bank, thank you very much. This is Bloomberg.
新型にはなんと2万点以上、前進でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance, I'm Rishika Gupta with the Bloomberg First Word News. The House is now daring the Senate to follow in its footsteps on stimulus payments to most Americans. Democrats and some Republicans approved a measure that would replace the $600 payments in the new virus relief bill with $2,000 checks. It's a proposal that's backed by President Trump. Many Senate Republicans previously opposed payments larger than $600. Joe Biden is accusing Trump loyalists at national security agencies of obstructing the transition. The president-elect warned that U.S. adversaries could take advantage of the situation. He cited political appointees at the Pentagon and the Budget Office. The Defense Department says it has been working with Biden's team with the utmost professionalism. China is struggling to get the world to trust its coronavirus vaccines. The Chinese shots could have been a diplomatic win for Beijing, but developing nations are wary. There's been little information about how the Chinese vaccines have performed in final stage clinical trials. Only the UAE and China itself have endorsed the shots for emergency use so far. Former British socialite Ghislaine Maxwell will remain behind bars in New York. A federal court judge has refused her proposal to be released on a $28.5 million bond. The former girlfriend of Jeffrey Epstein is fighting sex trafficking charges. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. Guy?
Rika, thank you very much indeed. The world's largest cryptocurrency. Let's talk about that, because it's continued to push to new highs, breaching $28,000 for the first time over the weekend. We're talking about Bitcoin here as well. The digital coin has almost tripled its price in 2020. The question is, can the rally be sustained into 2021, or are we going to see a repeat of past Bitcoin bubbles? Volatility remains something of an issue. Joining us now, Jesse Powell, Kraken Exchange co-CEO, a co-founder and CEO. I should get that the right way around. Kraken, a huge exchange for crypto. Jesse, thanks for your time today. Let's talk a little bit about what has got us to here, and then we'll talk about kind of where we go from here. 2020 appears to be the year that institutional investors have decided that this is a real asset class. How much momentum is there currently in terms of asset allocation?
There's a tremendous amount of momentum behind Bitcoin right now, especially as we lead up into the end of the year. There's a lot of uncertainty to come about the money printing of the dollar. I think a lot of institutional investors, they've had a lot of cash on their balance sheet. A lot of publicly traded companies now are acquiring Bitcoin, accumulating a position. I think the question historically has been, how do you justify having such an exotic, volatile asset on your balance sheet? And this year it's been, how do you justify not having Bitcoin on your balance sheet with the kind of performance that we've seen and the kind of inflation that we're seeing now in the market? Holding dollars seems like a very risky prospect compared to something like Bitcoin, which is completely finite, predictable, and even a greater store of value than something like gold.
The question is, will it actually act as a counterweight were we to see particularly tech stocks falling in 2021? If you take a look at the correlations between the real high-flying tech stocks and what has happened with Bitcoin this year, it is pretty close. Is Bitcoin really an uncorrelated asset, or is it basically part of the same story that we've seen in 2020 for tech?
Historically, Bitcoin has been uncorrelated to the rest of the stock market. I think what we're seeing right here now is that both financial assets are just kind of on fire and reacting to the money printing that's happening. There's loads, trillions of dollars being poured into the market. That's got to go somewhere. Unfortunately, most of it is not going to the individuals that actually need it, but to people that are speculating with it day to day. So I think a lot of that money, and I think we're going to see even more stimulus coming, is just going to get poured into financial assets. So for this run up, I think a lot of it is to do with the same reasons that the stock market is running up. People are just want to get out of dollars. They don't trust national currencies. The Federal Reserve is saying that there's infinite money out there. People just kind of don't understand where the end of that is, and I think are pumping the cash into assets, hard assets that are generating returns or more likely to hold value than a fiat currency.
Jesse, the Achilles heel of Bitcoin has always been its volatility, particularly for institutional investors. Do you think that volatility starts to come down now? And do you think it's almost a kind of circular argument because as institutions starts to move in, they will force the volatility lower?
I don't think that we're going to see a lower volatility in Bitcoin for a long time. Maybe not until Bitcoin replaces all of the world's currencies, which is something that the true believers have predicted would happen all along, and something that the new believers are predicting more and more these days. But I think between 28,000 and $1 million of Bitcoin, you're going to have a lot of volatility. That's potentially another decade. So I think the volatility is not going to end anytime soon. Bitcoin certainly is not for the faint of heart. People should be buying in through dollar cost averaging. They should not be day trading this asset. I think that it's a buy and hold asset. It's a long-term investment. If you're trading day to day, there's swings 20+%. You can easily get burnt. The people that have done the best are the guys that bought in 2009 and forgot about it and are still holding it today.
Why is it just Bitcoin at the moment? Why are other similar products not seeing the same gains that Bitcoin has been seeing over the last few months?
It's actually not just Bitcoin. Ethereum has performed amazingly well this year as well. It's now back over $750. It was down at $100 at the beginning of the year, so that has also seen tremendous returns. The DeFi story is growing and becoming a bigger piece of the ecosystem. These days, you're seeing middlemen completely removed from financial contracts through DeFi, which is largely happening on Ethereum. So that's a huge success story. That's in the process of a major protocol upgrade. I think the future is extremely bright for Ethereum as well as for Bitcoin, and I think it's another asset that people should be looking at if they're looking for something else to get into in the crypto space.
How significant is the regulatory risk, and is that something we're going to start to see manifesting itself in a significant way in 2021?
I think we're going to see more regulatory involvement. At Kraken, we're licensed all over the world. Many regulators around the world, especially in the major markets, have come up with some sort of regime to regulate cryptocurrency. For others, it falls within the existing regulations. So it's certainly not the Wild West. It's not what it was in 2011 when Kraken got started. But the regulators are getting more and more savvy. I don't think that there's a risk of any kind of hasty kind of clamp down on the market. I think that they're getting better at understanding the risks. They're getting educated. They understand that this is a remarkable technology, not unlike the internet, that has the potential to completely change the world and deliver a massive amount of good to the world, and especially the unbanked population. Right now there's like 1 in 4 people do not have access to a bank account, and crypto kind of solves that problem for people. So there's a huge amount of potential for this space, and I think that regulators see that. And from a public policy perspective, and especially from a national security perspective of the United States, where I am, you would not want to crush that. And I think there would be a huge outlash if the government tried to crush cryptocurrency.
Jesse, thanks for your time today. Thanks for the update. Jesse Powell, Kraken Exchange co-founder and CEO, on the amazing run that we've seen in Bitcoin and others over 2020. Will it continue into 2021? Up next, we're going to go back to the virus vaccine story. Amish Adolja, Johns Hopkins Center for Health and Security Senior Scholar, is going to be joining us. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Good morning, this is Bloomberg Surveillance. I'm Guy Johnson in London. Francine Lapgard, Tom Keane, both out today. Francine, I understand, will be back tomorrow. Looking forward to that. The US biotech company Novavax is starting final stage trials of its COVID vaccine. President and CEO Stan Erck telling Alex Steele that he's confident it will be as effective as the Moderna and Pfizer shots. The big question is, will it work against new variants?
We don't yet. Everybody's in the middle of testing other vaccines against that strain. What we do know is that our platform, we've used the same platform, a recombinant particle with an adjuvant that's worked very well against flu, which has many strains. And we've shown that our flu vaccine recently showed a very broad response against multiple strains. And so we're hoping that we have the same effect with COVID.
So phase 3, it's obviously a big deal to be starting. Can you update us then on your timeline?
Well, we can. And to be clear, this is our third efficacy trial we've started. We started a phase 2B trial in South Africa in 4,400 volunteers. In September, we started a phase 3 program in the UK, and we've completed dosing on that. And like all the other vaccines, you unblind when you have a certain number of cases. So we're waiting to get to that level in the UK, which will probably be early in the first quarter. And now in the US, when we started this trial, we'll be doing the same thing. We'll be accruing 30,000 volunteers, and we'll be watching for the number of cases. So we've got three ways to look at efficacy of our vaccine over the coming months.
Is it fair to compare the efficacy of a traditional vaccine, like from Novavax, as it is to the mRNA and their efficacy?
Well, I think it is. It's you measure. We're all measuring the same thing. We have globally, I think, fairly harmonized endpoints. In other words, what we're taking a look at the type of disease that we're trying to prevent, and so I think we can fairly consistently look across all the vaccines.
Do you expect like an efficacy of in the 90s? Like, is that something that we can realistically expect?
Well, we don't know until we know, and so. Based upon what we did in preclinical non-human primates and what we did in phase 1 trials, the immunogenicity data that we have demonstrated has been at or above the levels of the Moderna and Pfizer. So we expect similar results.
Do you have a good understanding yet of some of the side effects? Did they increase? Does it change versus age groups? I know you said they're blind, but do you have a read on that yet at all?
Well, what we have is a read on side effects from earlier studies and what we've been doing on phase 3 in the UK, and we have a benign, I guess we would call it, side effect profile. We always have with this with the adjuvant, which is the immune stimulant, and the antigen, the protein that we put in. We just finished, for instance, a phase 3 pivotal trial with influenza earlier this year with a very benign safety profile, and early studies with our COVID vaccine are the same.
You mentioned, you just compared the flu vaccine, you mentioned that earlier.
I'm placing an order to sell short euro, 122.47.4. Just right here.
I believe we'll have to tweak it, but if we did, it would take time, and you would do some comparability studies in animals and humans.
So do you feel, are you concerned at all? Do you think that would delay the time, delay the scale-up process? I know you think you don't have to tweak it, but I think we just want to understand, I think market participants want to understand kind of what the risk is of that new strain and how they need to think about it.
Yeah, so as I say, I think it's a low risk for our vaccine. It's a low risk that our vaccine will not work on the new strain. And if we had to take it, if we had to do it, we'd have to change the antigen somewhat and put it back into human studies for some period.
The Novavax president and CEO, Stan Erck, talking to Alex yesterday afternoon. Let's continue our conversations around vaccines and the virus. We are continuing to track the virus and the speed at which it's moving. During this period, Bloomberg has developed a unique partnership with the leading authority on COVID-19, Johns Hopkins. It's been at the forefront of the international response. So every day, we've been bringing you insight from experts in public health, infectious disease, and emergency preparedness from Johns Hopkins. Joining us today, Emma Shidolja, Dr. Emma Shidolja, the Center for Health Senior Scholar. Dr. Shidolja, good morning. Thanks for your time this morning. I just want to start off with actually your expectation for vaccines going forward from here. There is some expectation that today, tomorrow, we may see the UK clearing the Oxford AstraZeneca vaccine. It can be stored in the fridge. How big an impact will this vaccine have? We're waiting for the J&J vaccine as well, which is a single shot. Is it going to become easier from here to vaccinate people?
I definitely think it can only get easier as we get more candidates on the market, especially if they don't have really strenuous cold chain requirements the way the Pfizer vaccine does. And the AstraZeneca vaccine, I think, is going to be a win for the world, because if you think about trying to keep the cold chain intact in parts of the developing world where there is not very stable electricity, let alone access to deep freeze storage, I do think that this may be the vaccine for the world when it does get its approval.
One of the big challenges at the moment appears to be staffing. And it appears to be, and I keep bringing this up, there appears to be a zero-sum game that's working. On one hand, we have the need for staff to deal with the ongoing spike in cases that we're seeing around the world. On the other hand, we need staff to vaccinate people. Is it a zero-sum game? And in the moment, are we finding ourselves in a situation where we simply don't have the people to deliver the vaccines that have already been delivered?
Staffing in healthcare centers has almost been something that's kind of defies what happens in other markets where there is an increased demand for labor and then more people go join that because there's so many barriers to becoming a healthcare provider. You can't just hire people. And, it's unfortunate because we've had a long lead time. We knew that there was going.
Okay, I have to remove the order because it's moved too fast. Order remove.
Half out sick because they're getting COVID in the community, you're going to have a much harder time having enough people to vaccinate. We are seeing vaccinations in the United States at least ramp up now. It was something that kind of trickled out in the first days of the vaccination. I waited a couple of days before I was able to get my vaccine, but now it seems to be moving at a much more rapid pace. But yes, I do think as we move into the community, away from hospitals and nursing homes, we're going to need a lot of community vaccinators to be able to get enough shots in the arms of people to hit herd immunity. So I do think this is something we have to really think about, a sustainable approach to vaccination.
In terms of what you're expecting over the next few weeks, are we going to see a spike in cases as a result of the holidays? How big a spike do you think we are likely to see? I think I was on one of the front pages of the newspapers this morning that we have seen post-pandemic records in terms of air travel over the last few days.
It's inevitable that we're going to see a spike in cases. You have to remember that this virus thrives on social interaction, and many people traveled from one state to another and went to private gatherings where likely they let their guard down, didn't wear face coverings as meticulously as they should have. So we're going to see some level of transmission. Hopefully it's not something that really puts us kind of on a surge on top of a surge on top of a surge, to borrow Dr. Fauci's phrase, but it's likely that we will see some level of increase at a time when we already have record numbers of cases and record numbers of hospitalizations. Hopefully people took some level of precaution so that we won't see as the worst case scenario. I think that happened in some parts of the country during Thanksgiving. We did see increases all over as a country as a whole in the United States, but some states we did not. And maybe, hopefully that will happen again in Christmas. But I do think we have to be prepared for more acceleration of cases as we get into the next few weeks.
Are you expecting more transmissible variants to now be a feature of the landscape in the United States? And if so, does that push the herd immunity points out even further into 2021?
I do think, based on what we're seeing in the UK and South Africa and what we know about the lack of sampling and sequencing we do in the United States, this variant has been in the United States. These more transmissible variants likely have been here, and it shouldn't be a surprise when they actually detect that these variants are here. They've already detected the variants in Canada, for example. But I do think that if everything that we know about this variant, I think it's not all fully been proven. A lot of this is laboratory modeling. If we can actually show that this is what's happening, that this transmissibility is due to these mutations, and I think that's a fair hypothesis based on what we're seeing, I do think it does raise the herd immunity threshold, because the more contagious something is, the more of your population needs to be protected against it. I think that kind of ratchets it up closer to 75, 80% needed for herd immunity if you're looking at the population at a whole. But I think we'll see benefits from the vaccine once we get our vulnerable populations vaccinated, because that's really what's putting pressure on hospitals. It's those vulnerable populations, nursing home patients that are taking up hospital beds, that are using that are in the ICU, and that are a big proportion of our deaths. If we can get that group protected, I do think that you'll see a difference in the way we perceive the risk of this virus because of those vulnerable populations being immune.
As ever, our thanks, Dr. Amish Adolja of Johns Hopkins. Thank you very much indeed. Later today, Dr. René Dure, the co-founder and chief medical officer of HEAL, will be joining Bloomberg. Looking forward to that. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. Big changes may be in store for Jack Ma's Ant Group and is under siege from Chinese regulators. Bloomberg has learned that the company may fold its financial operations into a holding company that could be regulated more like a bank and would likely be subject to more capital restrictions that could keep it from lending more. Qualtrics has filed for what could be one of the first US IPOs of 2021. At the top end of its marketed range, the IPO would value the company at about $14.4 billion. It's been just 2 years since Qualtrics was acquired by the German software giant SAP. The company makes customer survey software. DNA testing company 23andMe has raised more than $80 million in equity in a financing round. The round was led by Sequoia Capital and NewView Capital. Consumer genetics firms like 23andMe have turned recreational DNA testing into a widespread phenomenon. More than 12 million customers have spit into a tube to learn about their ancestry and health background. And that is your Bloomberg Business Flash, Guy.
Brilliant, thank you very much indeed. So Santa still firmly in charge of these markets. The S&P, the Dow and the Nasdaq all expected to hit further highs today. It's interesting to see the Russell underperforming for a couple of days. Anyway, more coming up. The Bloomberg Surveillance simulcast is up ahead on television and radio. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Central banks are showing no sign that they want to take their foot off the gas.
Domestic activity is still really in the doldrums.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
The biggest stimulus that's going to come is the vaccine.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City and Berlin for our audiences worldwide, good morning, channeling a little Jonathan Farrow there. This is Bloomberg Surveillance, live on Bloomberg TV and radio. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, they all have the day off. I'm Carol Masser, along with Matt Miller, and this is what I call a woe-a-day, Matt, because you look at the markets around the globe, it seems like everything is just fine. It's like record after another record. Certainly we saw that in the U.S. yesterday. And yet those virus headlines, remind us that we are far from being out of the woods here.
Yeah, absolutely. And viruses are one of the top stories, or the vaccines really, one of the top stories here. But it's got to be that story overtaken by what we see going on in the equity indexes right now. I mean, the FTSE is gaining more than 2%, 140 points to 66.41. It is the first day of trading for the British index because they had yesterday off for the very British Boxing Day holiday. So it's the first day they've traded since the trade deal was done. But other than that, on this side of the Atlantic, we're focused on getting those vaccines out as quickly as possible. And I know on your side, you're focused on the possibility of $2,000 stimulus checks. That's something that leaves the Senate, certainly the Republicans in the Senate, in a bit of a dilemma.
Well, I do think at this point, markets are definitely, pricing in everything and anything at this point. And governments Matt, you've seen, around the globe, we saw this after the financial crisis. We continue to see it now that they are willing to do everything and anything to make sure that the economy, while coming undone, to kind of shore it up as much as possible. So we kind of know that that's happening. I have to say, though, between the U.S. aid package and other things, I mean, mega tech, internet companies yesterday, Apple had another record. I mean, it's just pretty remarkable, especially those tech names, which I think it's safe to say over the last month, after the last couple of weeks, that people are saying, okay, it's time for tech to kind of sit to the sidelines, and yet that isn't happening.
Yeah, even the financial services, the fintech companies in Asia are doing well.
Right.
We'll talk about that, I'm sure, throughout the program. Ant Holding coming out with a new plan to appease regulators. Let's take a look at what's going on in terms of the financial markets more broadly right now. First off, S&P futures are up again after another new record there. It looks like the rally is set to continue. And you can see the dollar weaker, at least here against the euro. But overall, the dollar is trading a lot weaker today. And 10-year yields are rising, even though the arrow's red there. The yield is actually rising to 93.97 right now. That means investors feel safe enough to let go of the perceived safety of government debt. Crude rising as well, up more than 1% to 48.23 in a bet on the economy. Take a look at what's going on over here. As I told you, FTSE rising again, big gain, more than 2% on the FTSE, and the pound is up as well, although that's not difficult on a day when the dollar is down. 135.05 is what 1 pound sterling costs today. And you can see Bitcoin gaining 1.25%, not yet back to the level that we saw over $28,000 on Sunday, but still a strong interest in the digital currency, or some would say commodity, at $26,932.
Hey, you know, you mentioned the dollar. I don't know if you saw this story, Matt, caught my attention. Bearish dollar bets near decade high as we get ready to wrap up 2020. So you mentioned the dollar under some pressure today, checking out those market boards, but we continue to see a lot of speculative traders really betting against the dollar here at year end. So that is certainly one of the other trades we're watching. Let's bring in our market guest to kick off this hour. Scott Wren is with us, Wells Fargo Management's senior global equity strategist, and he joins us here from Missouri, as he likes to remind me that I like to say. Scott, good to have you here. Remarkable that we're kind of at the end of this year after what a year it's been. What do you make, though, of once again we continue to see like global equity records taken out one after another?
Well, Carol, it has been a crazy year, and these record highs, you know, the market's definitely higher than where we thought it was going to be at the end of this year. But, you know, Matt mentioned bets on economic recovery, and whether you're looking at commodities, aluminum, you know, what the 10-year yield is doing, what sectors are performing, industrials, you know, have been a good performer. So these economically sensitive sectors, these asset classes that are sensitive to a continuation of the economy have done well. And clearly the market has counted on additional stimulus from Congress. Who knows, you know, whether we get $2,000 or stick with the $600. I think it's safe to say probably you're going to see even more stimulus from Congress. Good virus news. You know, we keep getting good virus news. The market's anticipated that for a long time. So I think it should be no surprise that we have multiple vaccines approved.
Good virus news. You mean in terms of the vaccine?
I'm sorry, good vaccine news. Exactly.
Okay.
I'm sorry, Carol. Yeah, good vaccine news, because certainly the virus news has not been good. But I think the market has a lot of confidence that there's a very, very bright light at the end of the tunnel. Certainly we feel there's a bright light at the end of the tunnel, and we're looking for, let's say, 8% return in the S&P 500 over the course of 2021.
Absolutely. There are a lot of good virus stories. Well, here at least, there are stories of countries looking at different viruses so they can add more to their arsenal, countries speeding up the virus rollout so they can get herd immunity done faster. Of course, we had the Novavax story yesterday, so it looks like more companies are going to be offering are joining the fight, offering a virus vaccine here. Scott, let me ask you what you think about consumers, because Larry Summers wrote an interesting op-ed for us yesterday. He's taking a lot of heat for saying he doesn't think consumers should get $2,000 checks. But I think there are a lot of populist politicians out there that would disagree with him, and it's fairly likely. Do you think consumers are really going to sit on that money and not go out and spend it, or are they just waiting for a chance for restaurants to open, for airlines to be safe again, for the sun to come out and make motorcycling more fun? I mean, I feel like if you gave me $2,000, I would have it earmarked for spending pretty quick.
Matt, I think if I had $2,000 in my pocket, I probably would spend it. I can guarantee you that my 29-year-old daughter would. So, you know, whether, you know, $600 doesn't seem like a lot to me. Now, clearly, we're borrowing a lot of money, and that is an issue. But it all comes down really to consumer spending. And I think really this last round of stimulus that was out there, the direct payments to consumers, a lot of that money was saved. And so, you know, what we want is people out there spending money. They need to be confident. They need to have jobs. But now, you know, you see a picture of Times Square and there's not much going on there. But in most parts of the country, I mean, if you're driving around, I don't care if it's a Tuesday afternoon or a Saturday afternoon, there's a ton of traffic. It seems like it's back to about 100%. And, you know, the only reason you would even know that there's anything going on in terms of a pandemic is you look over and somebody's riding in their car with a mask on. So I think people want to get out. They want to spend money. They want to go to restaurants and bars. cars. They're going to certainly spend, whether it's $600 or $2,000, they're going to spend some of that money. But, we certainly need consumer spending to be strong, to keep going, to keep this recovery moving ahead.
So, okay, I'm listening to what you're saying, Scott, but there are millions of Americans who, if they get $2,000 or if they get a few $100s a week more, it's really about keeping a roof over their heads and food on the table. And I do wonder, when does the equity markets, the financial markets, kind of catch up with what's going on, certainly in the United States, in a big swath of our country?
Well, Carol, you're exactly right, because, while many people would use that $600 or $2,000 for discretionary things, not, just things they want, not things they need, there's a large number of people, as you pointed out. I mean, they're paying rent, they're making a car payment, essential types of things. So I think that the market is looking well down the road, not just as to what's going on here in the U.S., but globally as well. Now, have stocks come far and fast? They certainly have. We all know that. But I think that, if we get some improving news, we're going to keep going a little bit higher here. We've got a 175 number for the S&P 500 at the end of next year. And if you look at the valuation, if you look at where interest rates are, if you look up the pent-up type of demand that's out there, those valuations don't look overly stretched. Certainly, they're nothing like March of 2000. So I think the market is not meaningfully overvalued, but certainly anticipating quite a bit of good news, certainly on the consumer front and the vaccine front.
All right,
Scott, thanks so much for joining us.
Thanks, guys.
Carol? Carol and I both thank you. Scott, it's been a long time. Glad we could talk to you today. Scott Wren of Wells Fargo Investment.
Happy New Year,
Well,
Scott.
it's good to see you again. Thanks so much for joining us. Carol?
Well, listen, it's kind of interesting. I do think this disconnect, Matt, it's something that has really kind of been bothering me a lot in terms of what we're seeing on Wall Street versus the rest of or a large part of our country in terms of people. I'm just looking at millions of Americans turning to food banks for the first time. And this is something that we consistently see. And I guess when I read in the morning and I just see, global records when it comes to the equity trade, I see Bitcoin. I see lots of companies that continue to take out records and becoming wealthier and wealthier companies. I think it's great. I believe in capitalism, but I do wonder, when does it become even more problematic that we have such a disconnect within a country and maybe within a world more largely?
Well, absolutely. Well, and I think one of the big stories of this pandemic is that it's going to accelerate, and Bloomberg has been writing a lot about this. It accelerates to some extent the income inequality or the wealth inequality, not just in that country, but globally. Of course, the poor and the less privileged are harder hit by this kind of thing, and that's definitely one of the realities that we're going to have to try and deal with, hopefully try and fight. But that still leaves the $2,000 question out there. Are consumers going to spend it, or are they going to keep it in their savings banks? And a lot of people think, maybe they'll save it for now, but come springtime, if the virus lifts off, they may have that money earmarked for something else.
Yeah, we do know now that you will spend it. So that's good to know. I hope your wife knows that. I'm just going to put it out there. Just going to warn her. All right, folks, we've got lots to come, including Matt and I are going to dig deep into electric vehicles a little bit later on. There have been so many headlines, including Apple and others, so we'll get to that. You are listening and watching to Bloomberg Surveillance. Matt Miller, Carol Master, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. The House has passed a bill that would replace the $600 stimulus checks in the new virus relief bill with $2,000 payments. House Democrats and some Republicans voted in favor of the proposal backed by President Trump. That creates a dilemma for Senate Republicans. Many of them previously opposed higher stimulus payments, but Trump's approval could put political pressure on them. Meanwhile, the House has voted to override President Trump's veto of the $750 billion defense spending bill. If the Senate takes similar action as expected, it would be the first time one of the president's vetoes has been overturned. President Trump vetoed the bill in part because he wanted to attach an unrelated provision that eliminates content liability protection for tech companies. In New York, residents suffering financial hardships due to the coronavirus will get a break. They'll be protected from evictions and foreclosures until May the 1st. That's due to a law signed by Governor Andrew Cuomo. And the post-Brexit trade deal is essentially a sideshow for the City of London. EU officials must rule separately that British financial regulations and oversight are strong enough to create a level playing field. Without that, there could be a steady leakage of business for the UK's finance industry. Big banks have already started to shift people and assets to the continent. Big changes may be in store for Jack Ma's Ant Group. Ant is under siege from Chinese regulators. Bloomberg has learned that the company may fold its financial operations into a holding company that could be more regulated like a bank. Ant would likely be subject to more capital restrictions that could keep it from lending more. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lo tomé como una terapia. Realmente logró la contención que yo necesitaba en ese momento.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
My judgment is that an across-the-board gift to 85% of taxpayers of a kind that no one thinks can be sustained every quarter is a mistake.
Of course, that is the voice of Larry Summers, Bloomberg contributor and former U.S. Treasury Secretary, who really created, Matt, quite a social media storm, if you will. Sitting down with David Weston, making that comment that people maybe shouldn't be getting $2,000 in terms of stimulus, and then kind of explaining it in terms of the amount of income that's really been lost to society versus what this stimulus will push back many times over back into the economy. But yet, coming on with our team on Balance of Power and with Kevin Cirilli, actually I believe on Sound On, to talk about what he really meant by it. But, I really do think, and this is something we can get into with our team and with Kevin in just a moment, about whether or not there are people that just don't necessarily understand what's going on really across the country for those Americans that are really struggling. And
yeah, I think there are a lot of people who don't know a lot of waiters and waitresses, bartenders and barbers, gym trainers who aren't getting any income right now, musicians, a lot of gig economy workers just aren't making any money. So when you talk about the average savings account ballooning, it just makes you look out of touch. On the other hand, there are people on the other side who feel like this is starting to slide into a kind of basic income guarantee thing, a universal basic income. And Larry Summers is on the record as having been against that for years. So it's an interesting debate for sure, but it's one that I don't think I would want to take a position on as publicly as Larry Summers has. But that's what he does. That's his job.
And this is what has happened. Markets, we've mentioned earlier. We'll talk about it later, but we're definitely seeing a global rally. But we do want to get into, take a quick look at your board. You can see S&P 500 futures. They're up. You got the 10-year with a yield of 0.93. New York crude up a hair too. That has to do with some production levels globally. But Matt, let's talk a little bit more about politics, because I do feel like this is obviously one of our big stories today, as it has been all year.
Yes, and we have Kevin Cirilli standing by, Bloomberg's chief Washington correspondent. Kevin, we were talking about this yesterday, and Larry Summers has been making headlines with you and with David Weston over the past few days as well.
Just a couple.
But now it looks like this. Now it looks like the Senate may be able to make some headlines as well. It's actually, the Senate Republicans are really in kind of a bind here, right? Because a lot of them have been against a bigger stimulus check, and now they have to either go against the president or waffle on their own words.
Some unknown variables this morning that we are waking up to here in Washington, D.C., and that is first and foremost whether or not Senate Majority Leader Mitch McConnell, the top Republican in the Senate, will present the $2,000 stimulus checks for a vote. Now, we should note yesterday, new information coming out this morning, that the Democratic-controlled House of Representatives needed 2/3 of a majority. They needed Republicans to pass this $2,000 check stimulus measure. They were able to clear it with Republican support. So in order to do so, they had to garner the support of centrist Republicans, one of whom I spoke yesterday with on Bloomberg Sound On. That's Congressman Fred Upton. He is a Republican from Michigan, a member of the increasingly important Problem Solvers Caucus, a bipartisan group of lawmakers who helped craft the foundation for this $900+ billion stimulus deal. I asked him point blank about why he voted for the $2,000 stimulus check, and he mentioned all of the reasons that you and Carol were just talking about, but he also noted for people in the middle class whose kids haven't been able to go to school, who have had to maybe balance working full-time with also having their students do the so-called virtual learning, to be able to get tutors, to be able to have some additional dispensable income to help their families. In no way were any of the Republicans, based upon my reporting, arguing yesterday that this should be a handout, so to speak, that becomes the norm. But the third and final point that I would make here is, regardless of the outcome in the Senate, this is an opportunity for the incoming Biden administration to look at the Republicans who are casting their ballot for $2,000 stimulus checks, as President-elect Biden, as well as other Democrats, have expressed support for, and to be able to say, those are the Republicans we are going to target in the first 100 days to get another round of relief through.
Well, and listen, I think about in terms of elections, Kevin, you know this better than most. People vote with their pocketbook, and it was pretty staggering that it took this long to get this second relief package through. But having said that, there's a great story in the Bloomberg that talked about Georgia Republican Senator David Perdue lobbying President Trump last week because he was getting nervous about the runoff. So I do wonder, at some point, do the Republicans realize that economic issues ultimately translated to votes?
Well, it was an excellent report by our new colleague, Nancy Cook. We're thrilled to have her, of course, joining the Bloomberg News team. I mean, just a really perfect illustration of how Senator Perdue was really viewing this as not just a political issue, but a significant policy issue that he, as well as Senator Kelly Loeffler, are hoping to make in the closing arguments of their campaigns. I would even go one step further. If you look at it from President Trump's perspective, based upon my reporting, Carol, he is very savvy in the sense of the final narrative of the weeks of his campaign. What he has done by coming out to support the $2,000 stimulus checks is to stake a claim in the ground for populism at a time in which many potential 2024 candidates, like Senators Ted Cruz, are increasingly talking about the $27 trillion national debt.
Right.
There's been a conservative bet, so to speak, that in the long term, that debt argument will win out. However, the president is saying that the populist streak in the Republican Party is still very much alive and well.
Yeah, listen, I think this is all about what do the parties want to be going forward, in particular, too, Republicans and Democrats, and thinking about the elections to come. Kevin Cirilli, always on it. Thank you so much joining us in Washington. Bloomberg News, Chief Washington Correspondent, host of Bloomberg Sound On 99.1 in Washington, D.C. Listen, I think it's, something we're going to be talking about, especially as we start, we'll get a new administration, Matt, and then we'll start counting down to the midterms. I do want to mention some headlines crossing. Anthony Fauci saying contact tracing very difficult with the current virus numbers. He said January virus levels could be worse than December. U.S. not at desired vaccine numbers at the end of December. And this is coming, when we're starting to see European governments, Matt, you maybe saw this morning, that they're planning ways to track people who get the vaccine, don't, so they can kind of follow where the virus goes.
Yeah, and I was talking with somebody here in Germany, an health official in Berlin, who was saying, it's possible that we could identify those who have gotten the virus and only those people would be able to take flights, or only those people would go to restaurants. It hasn't gotten that far yet, and we don't actually know even the true immunity effects, but we do know that people are thinking about those kind of processes already. Coming up, Matthew Hornbach, Morgan Stanley head of Global Macro, joins us. An interview you don't want to miss. This is Bloomberg.
have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in Berlin alongside Carol Masser in New York. We are in for Tom, John, and Lisa. They're out on a well-deserved vacation. Let's take a look quickly at what's going on in markets. Once again, a risk-on rally pushing equity indexes to new highs. S&P futures are up again after the benchmark cash index touched a new high yesterday. The euro is gaining, but really the dollar is losing ground. So most pairs that you look at involving the dollar will see a gain. 122 on the euro. You're going to see the same thing when we switch boards. Let's go ahead and do that right now and take a look at the pound. It is also gaining against the dollar, but I think more interesting is the FTSE. The way equities are rallying in London right now really tells you a lot about how investors view the Brexit trade deal. Remember, that was finally figured out on Christmas Eve. Right. Of course, the FTSE didn't trade on Christmas Friday. It also didn't trade yesterday because they were celebrating Boxing Day. So today's the first day investors have a chance to vote with their wallets, so to speak, on the Brexit deal, and they like it, up 136 points to 66.38. Of course, you over there in America are used to big gains on your equity indexes, with the S&P 500 up 15% year to date. The FTSE had been down 15% year to date, so they have a long way to go to catch up. But they're definitely trying to do it today. You can see there, Carol, Bitcoin rising as well, although that may be another case of just dollar weakness here, $26,985.
I kind of, what's interesting about the Brexit deal, Matt, is that what I'm understanding and just reading, and probably better than I do, is that so many people are leaving London. At least some of it has to do with the virus. But I do wonder what the future of the city is. It's interesting. We have this constant debate about, all right, it's the demise of New York City. Everybody's leaving because of COVID, and it's not going to come back. Time will tell. I've heard this story many times over of New York City, the demise of the city, and it just seems to come back stronger. I do wonder, though, what ultimately longer term will be the impact of Brexit on London.
Yeah, I think that's, for me, the biggest question as well. And I have to say, London is my #1 favorite city in the world. I absolutely love London. I lived there for years. I really enjoy visiting. But you have to wonder how many people feel the need to live there in the city when finance professionals are moving to Frankfurt or to Paris or to Madrid. And then, of course, the younger, cooler people are starting families and wanting to move out because you don't want to be stuck in a flat that costs like £8,000 a week during COVID times. You want to have a backyard. I'm sure you have the same experience in New York.
We're seeing it, but we'll see whether or not all of this sticks longer term. Let's see, though, what sticks longer term when it comes to the markets, because he is writing about what we might see, some of the surprises, top surprises for 2021. Let's bring in Matt Hornback. He's Morgan Stanley head of global macro strategy, joining us on this Tuesday. So, Matt, first of all, The Brexit news, we are seeing it play out. There's enthusiasm around the globe, whether it's the Brexit news finally, getting resolved, whether it's another round of pandemic relief here in the United States. There's so much, it seems, financial market enthusiasm. Does it make sense to you, and does it carry over into 2021 in your view?
Thanks, Carol. Yeah, I think it does. At least for the first several months of the year, I think the amount of liquidity that central banks are providing to markets, not just in the U.S., of course, but outside of the U.S. as well, is going to be pretty formidable. And I think markets are going to have a hard time not incorporating this liquidity into their prices. So we do think that risk on is the trade for the first couple of months of the year, certainly. And then I think once the vaccine becomes more broadly distributed around the U.S., around the rest of the developed world, kind of mid-year, then I think it becomes more difficult for markets in the second half.
How difficult in the second half? So are you expecting kind of official corrections at that point? Because I do wonder about, like, as you say, there's a point where people say, wait, it's time for us to look at fundamentals again. Maybe this run-up isn't justified. So what does the second half look like? Is it just a calming in the financial markets, or is it actually kind of, okay, let's reprice everything?
Well, I mean, I would say consolidation is what would be, kind of front and center for me. I think, corrections, we have had a couple of 10% corrections in the S&P 500, over the past several months, but they didn't last, and so it's really tough, I think, to call corrections during a period of time when liquidity is so overwhelming. I mean, again, I think Bitcoin, you can kind of see it in the price of Bitcoin as well. There's so much money being dumped into markets by central banks. Investors have to find a place to put it, and either you find a place that has some yield, and that's hard to do these days, or you're trying to find a place where prices just keep going up and up, and you can see that's happening in Bitcoin these days.
At what point is all of this optimism for a vaccine and a V-shaped recovery post-COVID priced in, Matthew? And how do you, when we see something like Airbnb going for $100 billion during COVID, it was only worth $30 billion before COVID. Isn't that the froth that tells you something, assets are overpriced here?
Well, I mean, equities are really not my bailiwick. But what I would say is two things. Number one, markets typically price things in, or almost entirely price things in before they happen. So, if the market has its eye on the demand surge that should occur in services post-vaccine distribution, I'd expect markets to price that in by and large before the vaccine is completely distributed. So that would be the first way I'd think about it. The second thing I would point to is the bond market. One of the reasons I think that yields in the U.S. have not risen more than they have over the past couple of months is because of the liquidity that's being distributed around markets. Now, if all of a sudden you see yields start to rise more quickly, that would suggest that liquidity is not as ample as it was earlier, and that might put kind of risky assets in more danger. But at this point, you're not really seeing that. The 10-year Treasury yield is still below 1%. So I don't think we're there just yet, but those would be the two things, the two ways I would think about it.
So I got to say, Matt, I love lists. I'm a list maker. And you've got a list of the top 10 surprises for 2021. One that I thought that really stood out for me is you said immigration causes the northern lights to shine the brightest. You're looking at Canada.
Yeah, absolutely. Well, we've been bullish on the Canadian dollar for a healthy portion of 2021. And in our discussions with investors, what we had found, certainly in the middle of the year, but it continued throughout the course of 2020, is that people just think that there are some structural issues with the Canadian economy, and so we thought, gosh, wouldn't it be a surprise if these structural issues never really reared their heads, but some other issues like immigration actually carried the Canadian dollar even further higher. And so we decided to throw that into the mix for 2021 as one of our top 10 surprises.
When I look through MAGO, the MAGO function on the Bloomberg, I see that there's a bigger premium, Matthew, being paid for developed Asia assets right now. And I see one of your surprises is that developed market liquidity avoids emerging markets and drives a DM asset bubble. Why do you think we're ignoring emerging markets? I mean, they clearly come through this less scathed than everyone else.
Yeah, absolutely. Well, I mean, the first thing to recognize is that, the liquidity that's being provided by central banks is mostly occurring in developed markets. So it's the developed market central banks like the Fed and the ECB and the Bank of Japan that are providing most of the liquidity that we've been talking about in our research. And so you have to recognize that the liquidity that's being provided, honestly, it doesn't have to go into risk assets. It could stay in bank deposit accounts, or it could stay in money market funds earning nothing if it wanted to. But, we don't think it wants to do that. We think it wants to go out in search of yield. And so, this particular surprise that we wrote about just recognizes the fact that, look, the liquidity that's being produced in developed markets could, in fact, stay in developed markets. And so we've started to think about, well, what would be a reason why the liquidity would not overflow the borders of developed markets into emerging markets? And ultimately, it came down to the virus and the fact that, winter time for us in the northern hemisphere is not the same as winter time in the southern hemisphere. And so we just put two and two together and thought, well, maybe if the virus has a resurgence in the southern hemisphere, that might redirect that liquidity or keep that liquidity in developed markets and ultimately cause an asset bubble.
Right. Just a reminder.
All right, Matthew, thanks so much for joining us. Matthew Horn back there, Morgan Stanley Global Head of Macro Strategy.
Matt,
Carol?
that's what, I'm thinking of, like, what might be my top surprise for 2021 is just this idea. I think we have expectations that we reopen, as a society and as a country come summer. But I do wonder, as we get these variants, these new strains, I do wonder if that's one of the major risks, obviously, to the global economy as well as global markets next year. That's the one thing, right? There's no exact understanding of when we can kind of really put an end to all of this, especially when you've got new strains coming up.
And you guys,
you guys
open? Can't you? In America, can't you go to a restaurant or a bar? Here, all of that is closed. Gyms are closed. Barbershops are closed.
Southern California is shut. New York has shut its restaurants here. It depends. I talked to somebody in Austin, Texas. They said the malls were open. People were out and about. So I think it depends where you are.
Well, here it's all shut down. The only thing you can do is go to the grocery store. So I spend a lot of time at the grocery store, and car dealerships are actually a good. Only the repair shop, not the sales side, but you can go hang out in the garage, which is something I do a lot with my free time.
All right. Matt, you just don't change. I'm just going to say, which is a good thing. All right, coming up, Piotr Melies, we're going to talk with him, Rabobank FX strategist. We're going to talk currencies. That's coming up right here on Bloomberg Surveillance. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The House is now daring the Senate to follow in its footsteps on stimulus payments to most Americans. Democrats and some Republicans approved a measure that would replace the $600 payments in the new virus relief bill with $2,000 checks. It's a proposal that's backed by President Trump. Many Senate Republicans previously opposed payments larger than $600. Joe Biden is accusing Trump loyalists at national security agencies of obstructing the transition. The president-elect warned that U.S. adversaries could take advantage of the situation. He cited political appointees at the Pentagon and the Budget Office. The Defense Department says it has been working with Biden's team with the utmost professionalism. And Former British socialite Ghislaine Maxwell will remain behind bars in New York. A federal court judge has refused her proposal to be released on a $28.5 million bond. The former girlfriend of Jeffrey Epstein is fighting sex trafficking charges. And China is struggling to get the world to trust its coronavirus vaccines. The Chinese shots could have been a diplomatic win for Beijing, but developing nations are wary. There has been little information about how these Chinese vaccines have performed in final stage clinical trials. Only the UAE and China itself have endorsed the shots for emergency use so far. For the first time in almost 2 years, a Boeing 737 MAX will make a commercial flight in the US. American Airlines will be flying the plane from Miami to New York City. The 737 MAX was grounded in March of 2019 after killing 2 crashes, killed 346 people. It cost Boeing tens of billions of dollars in lost sales, fines, and damages. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Right now, we just aren't getting all the information that we need with the outgoing administration in key national security areas. And It's nothing short, in my view, of irresponsibility.
And of course, that is Joe Biden, President-elect Joe Biden, making some comments, concerns about the transition from the old to the new administration, not necessarily going as smoothly and not necessarily getting all of the information, especially when it comes to national security. And we know that is certainly an important issue as the administration gets ready for 2021. Quick check on markets as we wrap up the last few days of 2020, and you can see some more enthusiasm. S&P 500 futures just up about 16 points, up 0.4%. Euro at 122. The 10-year note with a yield of 0.94, so a little bit of movement there. New York crude, a little bit of support too. We had some headlines in terms of global production levels, and that has given some support. New York crude at 48.11. And Matt, I just want to, as we get ready for our next guest, I was taking a look at emerging markets versus developed markets. Emerging markets as a whole, if you look at the MSCI index, it's up about 13% so far this year. If you look at those large developed markets, as measured by the MSCI, it's up about 14%. So they're kind of on par with one another, which I was kind of surprised at.
Yeah, for sure. If you look at equities, you'll see that. And I wonder if it's the same across asset classes. We were just talking with Matthew Hornbach, and he was saying, you know, there's so much liquidity in developed markets, and the central banks are pumping so much out into those economies that could blow up a market bubble that you maybe don't see in emerging markets. Let's get over to Piotr Matis right now, Rabobank emerging market strategist. And Piotr, let me start with you know, that note, one of the surprises expected by Matthew Hornbach. What do you think about the huge liquidity being pumped into developed markets? What does that mean for the emerging markets you cover?
Hello, thank you so much for having me. I think that we are witnessing just the beginning of capital inflows into emerging markets. If you look at the price action, capital inflows to EM started to accelerate shortly after the U.S. presidential election, because that was still an element of uncertainty who's going to win in the U.S. If Trump had won, then that would be far more negative for EM than Biden's victory. So once that uncertainty evaporated, capital inflows accelerated, and I think that this trend will continue throughout 2021. I think that emerging assets have opportunity to catch up with these impressive gains across developed markets as we'll gradually return to normality next year. The prospect of the dollar remaining soft throughout next year also bode well for EM. So we are optimistic in terms of prospects for EM.
Piotr, though, how much of the trajectory that you're talking about when it comes to emerging markets bouncing back versus developed markets in 2021, how much of it, though, is contingent on the vaccine rollout in those emerging economies and how long it takes?
Definitely it's going to be crucial how quickly vaccine will be available across emerging markets. And unfortunately, lots of emerging markets don't have the same power purchase as developed countries. That said, I think that these markets are mainly driven by expectations. And look at the performance of European assets over the past few days or weeks. We know that the continent is struggling to contain the second wave of the pandemic. All those restrictions that governments had to impose to flatten the curve will result in weaker economic recovery from severe recession. That said, the market is still optimistic, assuming that vaccines will be available, they are available, that they will be redistributed in coming months. And I think that the same will apply, the same thinking will apply when you assess the outlook for EM. Yes, those emerging countries will have to wait a little bit longer for the population to be vaccinated, but I think that investors will already look further ahead, assuming that, okay, it's only a matter of time when sufficient percentage of populations will be vaccinated. So they'll be looking for opportunities across EM after EM underperformed throughout Trump's presidency.
I want to ask you about Central and Eastern Europe, Piotr, because we just had the Brexit, and there's a lot of focus on, the effects that trade agreement is going to have on the economies of Britain, France, and Germany, but not so much focus on what's going to happen to, residents, workers in the UK who won't be able to stay there. And a lot of those come from Central and Eastern Europe. Of course, there's also a lot of trade in goods and services between Central and Eastern Europe and the UK. What are your thoughts on the end of this relationship?
So definitely the fact that no trade deal scenario has been avoided is positive for Central Eastern European economies. They have strong trade links, especially Poland with UK. So the fact that trade deal has been agreed is good news. And I think that it's important to point out that exodus of Poles and other Eastern Europeans who worked in UK started a few years ago already. It actually started just before Brexit, the outcome of the EU referendum.
Right.
We have to keep in mind that prospects across Central Eastern Europe are quite positive. Wages have been rising, so there's incentive for Poles and other Eastern Europeans to come over and work in UK definitely diminished.
All right, well, something to certainly keep our eyes on. Piotr, thank you so much. Really appreciate it. Piotr Mattis joining us, of course, joining us to really talk about emerging markets specifically, joining us from Rabobank there on the phone. So, forgive me, Matt, I was just looking at something online. Pierre Cardin, just crossing, AP reporting that he has passed away age 98. Born in Italy, became naturalized citizen in France, and he created the bubble dress. I don't know if you know that, but really kind of legendary when you think about kind of those iconic designers, and then kind of went mass market.
He's definitely a name that I know, and I know nothing about fashion. So I guess we've lost Karl Lagerfeld.
Yeah.
We've lost Hugo Boss, and now we've lost Pierre Cardin. I don't think I can think of any other designers. Tom Ford, I guess, is alive and well. Thank goodness, because he also makes awesome movies.
Yeah, he does actually, right? He really kind of embraces all of it in terms of his fashion impacting so much. And I would beg to differ. Those of us who have seen you around the newsroom, those who have seen you on air, you're rather dapper, and you have great socks and hankies, usually. Do you have a hanky on? You don't have a hanky on. Do they even call them hankies?
No.
I don't even know. All right, we got to run. Coming up, James Bevan. He's a Chief Investment Officer at CCLA. We're going to talk to him a little bit more about the market. You are listening and watching Bloomberg Surveillance on Bloomberg Radio and Bloomberg TV. This is Bloomberg.
se logra una sonrisa de parte de cada persona que utiliza el dispositivo, ya que se pone en situación, entre comillas, de una persona discapacitada. Y ven que lo sorteamos de una forma agradable, porque el simple hecho de sentarse en un dispositivo ya es agradable.
Nace más como una solución de movilidad a personas con discapacidad. Nace Mandados como una opción de generación de ingresos y nace Mat Tools como generación de ingresos y educación a las demás personas que no están en silla.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Central banks are showing no sign that they want to take their foot off the gas.
Domestic activity is still really in the doldrums.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
The biggest stimulus that's going to come is the vaccine.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance on Bloomberg Radio and television. I'm Matt Miller here in Berlin alongside Carol Massar in New York City. Tom Keene, John Farrow, and Lisa Abramowitz all off today. Let's, Carol, take a quick look at the top stories in the markets that they're affecting. I think really the $2,000 stimulus check is still the biggest story for investors. It seems like that's what's driving us to ever new highs.
Well, investors excited about the prospect of maybe some more consumer spending happening, but that whole pandemic relief program getting through has really provided support. And I just think global support that we are seeing, whether it's central banks around the world, has really provided support and a bottom, if you will, to the markets. Quick check on how we are setting up on this Tuesday. Expected to be light trade. It is a holiday-shortened trading week, certainly here in the United States and elsewhere around the world. S&P futures, though, just up about 15 points. You've got the euro at $1.22, 10-year note yielding 0.94, and New York crude a little bit of support there as well. But if you take a look, we continue to see really records on some of those major equity averages. We saw that certainly here in the United States yesterday.
Yeah, absolutely. And we see really big rallies here, like on the FTSE. The first day of trading, I'll just remind everybody, for the FTSE, since the Brexit deal was delivered, that happened on Christmas Eve. Of course, London was closed for trading on Christmas Day, just like everybody else. And then because the British are so special, they were also closed for Boxing Day, whatever that means. It drove them to new highs, up 2%. They've had a horrible year on the FTSE, down about 14-15%, but they've come back just a little bit. And it looks like investors really voting that they like that deal, or certainly liked it better than no deal.
Yeah, exactly. And we're seeing, a rise also in the CAC 40, also over in Germany. So let's talk a little bit about markets, if we may. Let's get to our guest. James Bevan is with us. He's CCLA Chief Investment Strategist joining us. James, how do you see it? How do you explain some of the trade? I do feel like we are in a market that reacts to headlines pretty quickly, whether they're negative or positive. You kind of get it out there pretty quickly.
Indeed, and right now I would say that there is more appetite to perceive good news in statements made rather than worrying about bad news. And of course, most news stories come with a bit of both.
So if you take the Brexit announcement, for example, it's unambiguously good news that there is no deal, but it's certainly not good news for the services companies that still face an ambiguous future, and in particular financial services. But right now, markets are focusing on the good news.
Why do you think the pound isn't rallying more, James? I mean, I would have thought, we heard so many forecasts that were bullish up to 145, and especially on a day when the dollar is weaker once again, I would expect to see more than 135 in sterling.
Well, I certainly anticipate that we could see 145 by the end of next year, but the pound still has some really quite serious challenges ahead. So the Brexit deal is a step in the right direction, but it most certainly does not provide for the full resolution of the problems that the UK faces. So we will likely receive real growth in the UK economy of perhaps up to 7 percentage points this year. But the UK is still poorly placed in terms of global free trade agreements. It's simply not made the progress that it wished. People say it's going to be easy. Actually, if you look at the regulatory luggage that the UK has to take as part of the Brexit deal, this issue in terms of getting free trade with the US is going to be really tricky. The chlorinated chicken story isn't going away. And I think that leaves people concerned about the outlook for the UK economy.
What about the city, James? You know, we've been talking a lot today about what happens to financial services there, and there still hasn't been any kind of equivalency agreement. I don't know if that's going to come even in Q1 2021. Do you see a lot of your colleagues moving back to Paris, moving back to Frankfurt, fleeing the city for the continent?
Well, I would say that we have seen a general drift of both people and business activities to the Eurozone over the last 4 years since the 2016 Brexit vote. That was the moment when the chief executives and boards of the major financial companies said, okay, guys, we've got to get ready. We know it's going to happen. We don't know quite when, but let's position now what inevitably will happen. So I don't think it's going to come as a major shock to anybody, but many businesses have already relocated either to Paris or to Frankfurt.
Yeah, definitely that migration, that trend is definitely something we've seen and continues. Hey, James, we're going to leave it there. Thank you so much. James Bevan, he's CCLA Chief Investment Strategist. Have a good new year. We do want to talk about something that has definitely been I've been obsessed with it a little bit since those Apple headlines about really aggressively, again, moving into the EV market. But we want to get some perspective because there's a lot going on. There has been a lot this past year and a lot maybe in terms of expectations for the EV market come 2021. Mark Kaufman is with us, Ford Motor Global Electrification Director, and he joins us by Zoom on this Tuesday. Mark, it is so good to have you here with Matt and myself. Matt's a car guy, loves talking about all things car, but I am really interested too as well. So tell me about the Apple news. Let's start there. How significant is that in your view? And it's not something going to happen tomorrow, but in a few years.
Well, Carol, anyone who works in a traditional manufacturer, we're essentially going to expect disruption now from anyone that might be out there. Back, I know a couple of years ago when Dyson was considering getting into the EV business, at that point you realize any consumer product company could come into the space besides any startup.
So it's very difficult. It's very expensive to the point where, you know, globally dominant companies like Ford and Volkswagen are getting together, pooling resources. Can you tell us a little bit about your work with the German car makers over here in Wolfsburg?
Sure, Matt. Scale is so important, especially in the auto business. So in a case when we have a platform, you know, most platforms have a range of products that it can be suited off of. And then in the case of our partnership with VW, we had the European market skews a little bit smaller than the U.S. market. So we found there was equal opportunity for both of us, VW to get a bit more scale off their platform. And for Ford, it gave us an opportunity to have a product that's going to be slightly smaller than the product off of our dedicated platform that we have within our company.
I know one of the big problems here, Mark, is there just aren't enough charging stations. And although we hear from, partnerships like Ionity that they're building them as quick as they can, they're certainly not building them quick enough to be ready for the demand that's coming in the next few years. How do you think that issue gets solved?
Matt, that's a great question. And we know a combination of both range anxiety and the ability to charge your electric vehicle when you're traveling are top of mind for consumers. We believe range anxiety, as an example, our Mustang Mach-E has a range just over 300 miles, is helping on range anxiety. But at the same time, that charging infrastructure continues to get built out every year, especially for the high-power DC fast chargers. And it depends where you're at in the world, though. A lot of consumers we're finding are still charging at their residence if they have that opportunity to, because that certainly adds to the convenience of owning an EV.
What's interesting too, though, is, and I do wonder, Mark, safe to say, I think it's fair to kind of respect what Tesla and Elon Musk did, that kind of woke up the auto industry and showed that you can, maybe move faster than everybody anticipated when it came to the EV market. And I do wonder, in terms of strategy, when you look at maybe what happens next year, how has kind of the timetable changed dramatically? And could it change even more so, meaning sooner rather than later?
Yeah, I would say as I look back at 2020, I know for me the biggest surprise on the year is just how quickly the European market has moved in EV adoption. I would say that was a little bit higher than what we had forecasted at this time last year. And part of that is you're seeing more products come out. So as that EV offering is expanding from other manufacturers, both Renault and VW having products in the market in 2020 in the European markets, that has accelerated the growth. And at this point, we're seeing in both Europe and China, there's a clear race for leadership there in the EV space.
Well, listen, and on that point, we'll pick up on the other side of the break, because the Chinese market is one I find interesting, and Tesla obviously has been pretty aggressive there, but they've got their own domestic manufacturers that are moving to really, take hold, if you will, of the EV market. Mark, we're going to come back with you. Mark Kaufman, Ford's Global Electrification Director. He's going to stay with us, and we'll continue the conversation. Matt, I have to say, in our household, we think about what's the next car. We want it to be an EV, but my husband's kind of stuck on it should be hydrogen fuel cells. So he's like kind of waiting for a different technology, but we're thinking about our next car. We want it to be something that is better for the environment.
That's, you know what, I hope more people are thinking the way you and your family do, because it'll outweigh what I'm doing. The next vehicle I buy has to have at least 6.4 liters, and I only want naturally aspirated cubic inches.
What is wrong with you? What is wrong with you? You're not embracing new?
If Mark can figure out a way to put a big battery with my big block, then that would be even better, because I think the battery could be the replacement for displacement that we've been searching for so long.
Have you seen one of these? It's really kind of amazing. I think they're called a cell phone, Matt, and it's amazing, the battery. It's really small, and look at what it powers. I'm just going to put that out for you. I mean, technology, listen, we see how it's been changing rapidly and getting better and better, and it will for EVs. Just saying.
I have to agree with you. Definitely, for sure. You're right. So we'll talk with Mark more about what they're coming out with on the other side of this block. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The House has passed a bill that would replace the $600 stimulus checks in the new virus relief bill with $2,000 payments. House Democrats and some Republicans voted in favor of the proposal backed by President Trump. That creates a dilemma for Senate Republicans. Many of them previously opposed higher stimulus payments, but Trump's approval could put political pressure on them. Meanwhile, the House has voted to override President Trump's veto of the $750 billion defense spending bill. If the Senate takes similar action as expected, it would be the first time one of the president's vetoes has been overturned. President Trump vetoed the bill in part because he wanted to attach an unrelated provision that eliminates content liability protection for tech companies. And here in New York, residents suffering financial hardships due to the coronavirus will get a break. They'll be protected from evictions and foreclosures until May the 1st. That's due to a law signed by Governor Andrew Cuomo. And the post-Brexit trade deal is essentially a sideshow for the City of London. EU officials must rule separately that British financial regulations and oversight are strong enough to create a level playing field. Without that, there could be a steady leakage of business for the UK's finance industry. Big banks have already started to shift people and assets to the continent. Big changes may be in store for Jack Ma's Ant Group. Ant is under siege from Chinese regulators. Bloomberg has learned that the company may fold its financial operations into a holding company that could be regulated more like a bank. Ant would likely be subject to more capital restrictions that could keep it from lending more. For the first time in almost 2 years, a Boeing 737 MAX will make a commercial flight in the US. American Airlines will be flying the plane from Miami to New York today. The 737 MAX was grounded in March of 2019 after 2 crashes killed 346 people. It cost Boeing tens of billions of dollars in lost sales, fines, and damages. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
They potentially could start making their own cars
later in the decade. But that's more the core DNA of Cook and Cupertino in terms of going after this massive market opportunity. And I view a partnership with the likes of a Tesla, a VW, is likely the first step as they go after EV.
And that is Dan Ives of Wedbush Securities, analyst who covers the auto market and tech market, and talking specifically about Apple getting into the EV market, which I think really has been one of the more fascinating, more recently business headlines, Matt, that we've talked about. And I wonder, we're talking with Mark Kaufman. I do wonder if they would partner up with Apple. Maybe that's something we can ask him.
Yeah, well, I know that, when I was covering Ford more closely, I know that Bill Ford and Mark Fields at the time had invested a lot of money in, I think, an R&D facility out in Silicon Valley. I went out there and toured it. It was pretty amazing. I also saw one of the original GT40s in the Gulf livery, which I wish I should have prepared a picture, some video of that, because it was amazing. And they've been doing so much at Ford ever since, Bill Ford was convinced by the Sierra Club, I think the legend goes, to start doing better for the environment. And that's when he got rid of the big excursions that I loved and started getting more into the kind of EcoBoost engines, and now they're going, of course, for the full EVs. Mark Kaufman is still with us, Ford Motor Global Electrification Director. And Mark, I want to hear about some of the products. As you can tell, I'm very close to the Ford family. I've spent a lot of time with your boss. Alan Mullally is a very close personal friend of mine, and I wonder what's next. You've got the Mach-E, and you've got this partnership with Volkswagen. What else can you come out with that's going to blow our minds?
Well, first, coming late summer in 21, we've got the Mustang Mach-E GT, so that is the performance version of that product. So we're super enthusiastic about that. You've just got fantastic 480 horsepower, 634 foot-pounds of instant torque in that EV, so that's going to delight customers in that space. But even more importantly, with 35 years of commercial vehicle leadership, we've got a Transit full battery electric vehicle van coming out. And that comes in lots of configurations to meet a wide breadth of consumer needs, and that's also in 21. In late 22, we're tapping into probably our most iconic nameplate with an F-150 full battery electric vehicle launching.
And a lot of people know the F-150 is probably my favorite vehicle of all time. I had the 6.2-liter Raptor version, which was amazing. I love torque. If you could deliver it to me with a battery, I honestly don't care if it comes from internal combustion or electric. It sounds like it would work great in a Transit as well, which is an amazing product. What about your partnership with Volkswagen, though? We talked a little bit about it in the past block, and I'm wondering, can you envision another model? Can you envision deepening that partnership? Because it's such an exciting transatlantic joint venture.
Yeah, Matt, Ford continues to be open to strategic partnerships where they make good sense. And clearly, that first relationship with VW is a start. We also have equity interest in Rivian. So we've shown that where it makes sense for Ford, we're certainly going to be open to those partnerships.
Hey, Mark, I just want to follow up on what you said about the Mach-E, and I do wonder if you guys are going to allocate more to Europe next year to meet and comply with some of the tougher COT standards. Because I'd love to also get your thoughts about EV in Europe. Is it a breakthrough year next year?
Yeah, and let's start with I mentioned the growth in Europe this year, especially in markets. You've got your big three core markets between Germany, UK, and France that have really accelerated this year. So when we start thinking about that technology adoption curve, there's usually a break point from 2.5% is usually where you start moving into early adopters. And as we're finishing up 2021, all three of those markets now have tipped up to about 5% EV share of industry. So we're going to expect continued growth in those markets.
Does that mean allocating more Mach-Es?
We're always looking to get product to customers, and obviously having demand for those products and pull is going to be fantastic for us.
So one thing I want to ask you too, and going back to Tesla for a moment, because they really, like I said, I think everyone would agree that they really shook up the EV market. But I do wonder, some of the problems that they've had, quality issues, does that provide openings, do you think, for some of the established auto players?
Yeah, I don't think, for anyone who's coming new into the auto space, I think you shouldn't underestimate essentially the value of a good distribution network and the ability to take care of customers. So just maybe to give you some quick U.S. numbers, we have 2,100 EV certified dealers in the U.S., and we have 10,000 trained service technicians who are capable of dropping batteries off of cars. Unfortunately, accidents happen within the world. And, for the ability to get cars into our service bays at Ford and back out, we think is going to be a continued advantage for us.
Yeah, I wonder about service bays. I mean, how necessary will they be when you have electric cars? I assume if you do a better job than some rivals at quality, you're going to need fewer repairs. You're also going to need actually fewer people to build them, right? Is it just going to be a less people-intensive business car making?
Yeah, it gives us, I think, a little bit of room to have more what we would call top hats or more product configurations off of a platform in a plant. So the line length for an electric vehicle is about 30% shorter than a traditional line. So it is a little bit more efficient. So in a case where before we might have, just one product at a plant, we might be able to get two products in off of the same platform. So there are some efficiencies that we'll have. And while service patterns certainly change with that, we still think there's going to be good ongoing throughput. As I said, unfortunately, accidents do happen. So getting customers in and out quickly is going to be important for us.
All right, really fun discussion. Matt's all in on cars, but I just want, for the record, Mark, I also am into torque. I'm just going to put it out there, okay? Mark, thank you so much. Have a great new year. We look forward to talking to you next year. Mark Kaufman, he's Global Electrification Director over at Ford Motor. Yeah, Matt, I mean, I just think what's going on in the auto industry is fascinating, and I'll be curious to see what happens in 2021. We didn't really get to explore China too much, but it is a huge domestic market, and they are developing their own domestic players, and I don't know what that means for the rest of the world.
Well, I know, look, his boss, Dr. James D. Farley Jr., spent a lot of time over here, spent some time in Asia. He has so much experience globally, and he is such a car fanatic that you can be sure Ford is exploring, as Mark Kaufman just told us, all of the possibilities and partnerships that they can. So it'll be exciting to see what they can do.
Don't you feel like it's all about partnerships? It's just like the technology world, right? You have these strange bedfellows, and you're increasingly seeing that certainly within the auto industry, but it makes sense.
For sure. And you know what? Sergio Marchionne used to say this a lot, and people thought he was kind of crazy. But now, post Sergio Marchionne's death, a lot of people are saying he was right. They really need to get together and combine their resources.
He definitely liked you, too. Michael Herson is coming up, Eurasia Group Director of China. We're going to talk about that Alibaba news. Jack Ma, we've got to get into it. That's coming up on Bloomberg Surveillance, and this is Bloomberg.
Manage your debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
And a very good morning, everyone. This is Bloomberg Surveillance live on Bloomberg Radio and Bloomberg TV. I'm Carol Master at Bloomberg headquarters in New York, along with Matt Miller. He is in Berlin. Quick check on the market trade, because we are seeing certainly optimism around the globe. We saw records being taken out once again on those major U.S. equity averages yesterday. Some support once again on this Tuesday, just up about 0.4% on S&P futures, and we're just 1 hour away from that open. 10-year note, let's draw some attention to that, 0.94. There a little bit of movement, though, and some support continuing in New York crude markets. And Matt's been really pointing out when it came to the European trade, we did see a rally over in the UK markets, that after that long holiday week. And of course, London markets were closed yesterday because of the Boxing Day holiday, Matt. So getting a chance to react to the Brexit news.
No one's explained to us yet what Boxing Day actually is. I know it's the day after Christmas.
Didn't you read Bridget Jones and see it in the movie? It's when you wear funny sweaters, isn't it?
No.
That's all I know.
Is it? I mean, it's nothing to do with the sport of boxing, right? And it's not like boxing presents. I don't really get it. But
London, could you call us right now and explain Boxing Day to us? Because we're having some problems here.
I should know. In any case, the rally there is remarkable. The FTSE is gaining by the most that we've seen it since November 9th. So it's been, seven weeks since we've seen this kind of rally on the FTSE. And it's interesting because it means investors, either they like this deal a lot, or investors were worried that there would be no deal and they're just liking it better than the no deal that we had. Let's get over to Michael Herson right now from Eurasia Group. He's the China director there, and we have a lot to talk about in terms of trade deals with you, Michael. Mainly the idea that Europe and China could trade closer has been one that has been pushed certainly out of Brussels for some time. And now it looks like we have more solid details that relationship is going to get deeper. Can you tell us about it?
Sure. Well, it looks right now like the EU and China are going to sign a bilateral investment treaty, or at least will finalize the deal in coming days. Now, there's still some potential complications. There are some quarters in Europe that are not happy about this deal. It's going to have to pass the European Parliament, but it looks like they're going to get the deal done. And I think you have to count this for now as a win for Beijing, which really wanted to squeeze this deal in before Joe Biden takes office and before the U.S. and EU form a common front against China on a variety of issues.
Listen,
Michael,
this seems like a pretty big deal. I mean, they've been doing and trying to get this together for some time, but I do think it, essentially will cement a relationship and kind of push the U.S. As Joe Biden comes into the White House, kind of push the U.S. to the side.
I think it's going to be an initial challenge for the Biden administration to be clear. And look, Europe is not going to align completely with the U.S. when it comes to China. It's too big of a market and too important. But, at the same time, Europe has really changed its tone with China. We need to also look past this deal. There is a growing sense from Europe that China is a strategic competitor. Europe has many of the same concerns as the U.S. on values issues like Hong Kong, Taiwan, and China's treatment of the Uyghurs. So I think there's going to be some potential for Biden to work with Europe on a variety of issues. This deal shows it's not going to be a layup by any means.
Well, and it's interesting. Well, what do you think will be ultimately some of the implications? Let's be specific. Let's drill down. What does it mean? What is potentially the U.S. maybe squeezed out of? What does it mean in terms of opportunities for China and Europe specifically?
Well, I think in terms of market access, European firms are going to have a bit of an advantage, and that's going to come in areas from financial services to autos to a variety of other areas, especially as the U.S.-China relationship is only going to get, I would say, very moderately better under Biden. So I think for market access, if you're thinking about European firms for whom China is a large market, this is an advantage over the U.S. But this is an investment treaty. It's not a bilateral trade agreement. It's not it's not a blockbuster deal. It's a big deal, yes, but I think it means market access for European firms in China.
Does the Brexit deal or does the sort of UK behavior also take out another competitor? I mean, is Europe able to create this bridge to Asia and get a leg up on not only the US but also the UK in terms of trade?
I think to some extent it's going to be interesting to see what the UK does with China now, because a UK without Europe means that China is that much more important. But in the UK, you see the same kind of pushback against China that you've seen in the US, in Australia, and a number of other quarters. So I think it's going to be challenging for the UK in terms of financial services companies to really look to have the city and London play a larger role as an offshore financial center for China. I think that's going to be a political challenge now.
Hey, Michael, one thing I've got to ask you about, and, we didn't really cover it too much yesterday, but we've all been following it closely, is what's going on with Alibaba and Jack Ma specifically. And the headline today is that Ma is planning with Ant Financial to fold its financial operations into a holding company. Basically, it's about appeasing Chinese regulators. They were too concerned about how powerful and how big, especially when it came to the financial sector, that Jack Ma and Ant Financial was getting. What does this say about Chinese companies specifically in China? Is there a bigger, broader message? Because we did see some of those Chinese tech companies sell off yesterday, rallied a little bit today. What's the message here?
I think the message, very simply, is that if you are a private company in China, you need to stay within the lines. Some of those lines are political, and Jack Ma had criticized China's regulators, which I think turned the heat up on him. But it's also about market power. For Beijing, private companies exist for a reason, and that is really to serve the broader interests in China. They need to be good corporate citizens, and that means not abusing market power and not playing fast and loose with financial regulatory rules. So I think for the very large Chinese fintech players and large Chinese e-commerce platforms, you need to incorporate that political risk. If there is a sense that they are moving too far, too fast, that they're too powerful, I think Beijing is clearly now going to cut them down to size.
Yeah, certainly, and moved quickly. Hey, listen, we're going to leave it there. Michael, thank you so much. Appreciate your time. Michael Herson, he's Director of China over at the Eurasia Group, joining us on this Tuesday. I do want to mention a few headlines crossing the Bloomberg, and this is coming from President-elect Joe Biden. He is expected to say later on, to make some remarks, if you will, later on from Wilmington, Delaware, to say that the Trump administration vaccination pace is lagging. He's also expected to say COVID infection rates are seen increasing. So to make some official statements, you know, what's interesting, Matt, is for a long time, certainly after the election, President Biden, President-elect Biden, I should say, was very careful in terms of commenting on the vaccine progress, on the virus, but he's definitely coming out at this point because I think as we get closer to him taking over, concerned about the transition and making sure it's smoothly, especially as we see these numbers growing.
Yeah, he's going to want to hit the ground running,
Totally.
certainly, and I think this is something that you're seeing now from many other countries as well. So Germany has plans to get the vaccine out faster. France and the UK are trying to do it as well. John Lauerman, Bloomberg News health editor, joins us to talk a little bit more about this. And John, is this partially, are we going to see countries try and make grabs for the resources that are out there? Is this going to start to get really competitive?
Well, good morning. Yeah, we may see some of that. I mean, we've already seen that, right? That's been going on for a while. The U.S. And Canada, really, the U.K. as well. Those have been the countries, the wealthiest countries have been the ones to reach out and grab the vaccine as quickly as possible. I think the interesting thing that you're seeing right now is that the rollout probably isn't going as well as had been anticipated. Part of that may have to do just with the mechanism of the rollout itself. In other words, that there's some growing pains. Part of it may have to do with demand. It just isn't clear yet exactly what's happening on the ground, why the vaccine isn't rolling out, at least here in the U.S., I think in other countries as well, quite as quickly as we had anticipated. I mean, a few months ago, or a few weeks ago even, we were talking about, 20 million doses by the end of the year. It seems pretty clear that that's not going to happen. And this is a good opportunity to plug a feature that we have in the Bloomberg that some of my colleagues have been working on, which tracks the number of doses that have actually been administered worldwide. And that's just over 4 million so far as of December 28th.
Well, John, this is so interesting because one of the things that kind of caught my attention too is that we are seeing European governments talking about planning to track the number of people getting vaccines to help chart a path out of the crisis. Germany is considering some legislation to ensure that unvaccinated people are treated fairly. I mean, what they're thinking about, we talk about, testing and tracing, but now we're moving to another stage when it comes to who got the vaccine and kind of tracking them as well. And I think about where Joe Biden's coming out, he's concerned about the transition. It's not necessarily going as smoothly, and how crucial all of this is getting to a point where come summer, we can kind of move back towards a more normal society. Are we going to have to do this kind of tracing when it comes to the vaccine in order for the world to start reopening?
Well, maybe before we get to that, we got to start thinking about confidence in the vaccines.
Yeah.
This is something that has been an issue for a while now. Obviously, there's been concern about vaccines among certain quarters of the population. Throughout the process of developing the vaccines, I think health officials have tried to bolster confidence. The name Operation Warp Speed, for example, there was concern that name might imply that corners were being cut in the vaccine. We've seen some very rare reactions to the new vaccines,
right?
That have raised some concerns. So I think what we have to do is, I think Dr. Fauci is trying to do, keep on reinforcing the safety of the vaccine, and then try to make sure that people are confident enough to take the vaccine, and then of course we have to get the supplies out there as well. That's another issue too.
None of it's easy, Matt. That's for sure.
Actually, another cool thing is, John, you worked on a story with Scott Squires and Jake Rudnitsky about Argentina kicking off the vaccination drive with Russia's Sputnik 5. And I think it's interesting, we focus, of course, on the Western vaccines in the Western countries, but it's interesting that there are other efforts going on. This is a global issue, so I'm glad to have run across that story on the Bloomberg today. John Lauerman there covers healthcare for us here at Bloomberg. Thanks so much for joining us. Carol?
Yeah, and there you can see that headline that President-elect Joe Biden expected to give a plan to boost those vaccines. So we're going to get some more specifics. All right, folks, coming up, Bloomberg Television and Radio. Just keep in mind that later on we're going to hear from Adam Posen over at the Peterson Institute, see what he has to say certainly about what's been going on, some of those big headlines, virus and other, and the economic impact. You are watching and listening to Bloomberg Surveillance. Carol Master, Matt Miller, and this is Bloomberg.
With the First Word News, I'm Ritika Gupta. The House is now daring the Senate to follow in its footsteps on stimulus payments to most Americans. Democrats and some Republicans approved a measure that would replace the $600 payments in the new virus relief bill with $2,000 checks. It's a proposal that's backed by President Trump. Many Senate Republicans previously opposed payments larger than $600. French fashion designer Pierre Cardin has died. Cardin was a visionary who dressed both the famous and the masses. He wasn't just about clothes. Cardin also struck his brand on a wide range of products, everything from bath towels to fragrances. His career lasted more than 3/4 of a century. Pierre Cardin was 98 years old. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry.
Politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
is take a consumer-first approach. We really want the consumer to guide us on how they want to see content. Right now, they're telling us that they really want to see more and more content on Disney Plus and Hulu.
That was Bob Chapek, Walt Disney Company CEO, speaking to us back in October. Of course, Disney Plus is one of the businesses that has really, I don't know if I could say cashed in on the pandemic. That sounds bad. But they've done well during the pandemic because people are staying home, because people are locked in, and
Winners
there's
and
little else to
losers.
do besides watch content.
Winners and losers. I
Yeah.
agree. It's like a little uncomfortable to say it, but man, they have, as you said, really benefit. Netflix, the same thing, right? Everybody is just watching everything and anything on streaming.
Yeah, absolutely. And don't forget Amazon and Hulu. And there's so many different channels that I'm waiting for one package that wraps them all together. Like, remember when we were kids, you could get cable? There was this cable thing, right? And you would get it and it had all the channels on it. That's what I want now.
Well, we're rebundling. It's just streaming. All right, let's get to our reporter, Ryan Vlastelica of Bloomberg News, watching what's going on when it comes to streaming this year. It is all about content. We heard it from Bob Chapek of Disney. Ryan, I watched Wonder Woman with my daughter. It seems like a lot of other people did too. Big screen going to streaming. I do wonder if we are at a tipping point, kind of a pivotal change when it comes to
Hang on, you
those-
watched it home or in the movie theater?
No, at home, safely with my own popcorn.
Oh, okay.
So I do wonder, Ryan, are things going to change dramatically? Are things going to stay this way where we're going to see things going straight to streaming post-pandemic?
Good morning. That's a great question. It's obvious that streaming is here to stay, and we're going to see a lot of content go directly there. We might see more hybrid models like we saw recently announced with HBO Max. Major titles like Wonder Woman 1984 debuting on streaming platforms and in theaters on the same day. This is actually a really important test case of Wonder Woman 1984. It did quite well in theaters over this past weekend, made about $17 million, which was above the high end of expectations here. Shows that there are a lot of people who still want to go out, want to go to a theater and see a movie. You know, this number is especially impressive considering that you have major markets like LA and New York. They're still closed, and the theaters that are still open, they have seating restrictions. So there is a lot of pent-up demand to see this, even if there is an option that you can watch it at home, essentially for free with your monthly subscription. So it's very likely that as the vaccine gets rolled out, as theaters reopen, as all these major movies that were delayed from 2020 start opening next year, it's likely that we'll see a lot of people who just want to get back into the theaters, even if there are at-home options.
Right.
So and I have to agree, going to a movie theater is a fantastic experience. I haven't done it since, I think, February, but it's something I want to do again. Ryan, how is this changing the picture in terms of studios? I mean, the major studios in Hollywood, are they losing the clout that they had, and that's going to the Netflix, the Amazons, the Hulus? Are we seeing even movie industries in other countries that are starting to gain a stronger foothold? Because I believe Hollywood kind of got its power that way in the first place.
Yeah, absolutely. I mean, it's pretty clear that if you have these major players, Netflix being the most prominent example, you have a lot of major filmmakers who want to work with them, a lot of major actors. There's a lot of great distribution and promotional stuff going on there. You're not seeing that as much in the same way with some of these, traditional studios. There was a lot of controversy when, the HBO Max and things being put directly there. A lot of the filmmakers who were impacted by that, expressing disappointment that their films weren't getting sort of an exclusive theatrical release. But, I do think that over the longer term, you're going to see these major films really focus on the theater. That's where you make the bulk of your money. Even though Disney, for example, has put some titles on streaming first, like Soul this past week. They have indicated that they're going to continue to do a sort of traditional distribution platform and roll things out in the theaters.
Yeah, I heard some of the folks on Bloomberg TV earlier talking out of Europe, talking about Soul. I do wonder, Matt says, please, can you at least plug Midnight Sky by George Clooney? I watched it. What's interesting too, Ryan, is I think we saw it with Reese Witherspoon. Like, these are big movie stars who are embracing streaming in a big time. It's given it almost validity. And I do wonder, how we see even more of that going forward.
Yeah, absolutely. It's hard to think of many, A-list movie stars who haven't done something for streaming. Like right now, the only one who really comes to mind is Tom Cruise. And then we had Tom Hanks did a film for Apple TV Plus. Really down the line to mention George Clooney. Brad Pitt has done it. So just there's so much interest in streaming. There's a lot of money right now for content. A lot of filmmakers and actors have sort of the freedom to make, their dream projects. So right now, it's really a bonanza on streaming. You're not seeing that as much with the traditional model, which is more, focused on major franchises and so forth.
The other thing I was kind of reading in and doing some research to ahead of talking to you, and the first ever NFL game to be shown exclusively on streaming platforms, that happened, I think it was Saturday night, between the 49ers and the Arizona Cardinals, had solid numbers. So, I do wonder, what is the real success story? Is it a combination of great content, which we've seen already? Is it also sports really kind of increasingly embracing the streaming space here, Ryan?
Yeah, absolutely. I know sports is one area within streaming that hasn't quite been achieved the same kind of success that other forms of content have been, just because there's a lot of live elements and so forth. It's not really an on-demand kind of thing that you want to, you can watch the George Clooney movie whenever you want, but you probably want to watch the game as soon as it happens, so you're not, getting spoiled on how it comes out. So this is an area that there's been a lot of interest in. Disney has ESPN, and they're trying to integrate it with Hulu and other packages. So this is going to be one area that's going to be worth watching going forward.
Yeah, just real quickly, 30 seconds here. Who's going to be the big winner, you think, when it comes to 2021, when it comes to streaming? Is it all about Disney at this point?
Disney and Netflix are just so big right now. I would probably say it's going to be so much focus on Disney. They have so many of these major titles and properties. They recently announced all these new Star Wars related shows, all these new Marvel shows. So, certainly if you are invested at all in pop culture and these major titles right now, that's really where you have to be.
Yeah, exactly. All right, good stuff. Ryan Vlastelica of Bloomberg News, who's been tracking the streaming space for us. Great stuff. Good stuff. Really appreciate it. All right, folks, just about 36 minutes away from the opening bell on this Tuesday. And we've seen a lot of market support globally here. Once again, the enthusiasm over finally getting a Brexit deal, getting that second pandemic relief package, and just a reminder that global central banks will continue to do anything that they really need to really prop up economies, especially as we continue to see those virus cases continue to rise around the world. We continue to see shutdowns of the economy, even as the vaccine rollout happens. But again, as we heard from our John Larriman, it's not always so easy, and there are certainly difficulties when it comes to the logistics. You can see S&P 500 futures just up about 15 points, and also looking at that 10-year of that yield firming up just a little bit, up to 0.94. All right, coming up on the open on Bloomberg Television, Matt Brill. He is Invesco's senior portfolio manager and head of U.S. So we're going to talk about the markets there, as our own Matt Miller will count you down to the open on this Tuesday. We're going to also expect to hear from President-elect Joe Biden a little bit later on. He's got some thoughts about that vaccine rollout and those increases in those vaccine numbers. So we'll be tracking it all right here on Bloomberg. I'm going to go back over to surveillance on radio.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010.
For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive, and so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning for our viewers worldwide. I'm Matt Miller, in for my brother from another mother, John Farrow. The Open starts now, or the countdown to, just 30 minutes to go. The big issue, stocks pointing to fresh records for another day. Headwinds, though, moving to the rear view mirror. It's no longer a concern. Maybe that in itself is a worry.
The fiscal aid is a good thing. It certainly is buoying markets.
The package overall has been passed.
If there is a risk, a positive risk for markets, it's actually overstimulation.
There are a lot of questions already early in the calendar for next year. There's already signs that we may look for a second fiscal stimulus. These Georgia runoffs, what happens there?
The markets at the moment are sustained by the sentiments of investors that are very, very open to risk.
You see very little, if any, concern priced in via the equity market.
You have a new breed of investor that really is trading on sentiment and emotion.
I am a little bit concerned of where we are in markets right now.
A lot of great news has been priced into the markets, that's for sure.
Senate Republicans now facing a dilemma in Washington after a vote by House Democrats to send $2,000 checks to most Americans, a move backed by President Trump. For more, let's bring in Bloomberg's Kevin Cirilli and Abigail Doolittle to talk about the markets. Kevin, we'll start with you. How difficult is this for Senate Republicans that have to either back President Trump or, in a lot of cases, go back on their words?
It's unknown whether or not Senate Majority Leader Mitch McConnell will, in fact, have a vote for the $2,000 stimulus checks. This, of course, having at a time in which unanimous consent would be the procedural hurdle that this measure would have to clear. It would require 2/3 of a majority in the Senate because of its ability to be fast-tracked, as is called in the nation's capital. Again, some procedural dynamics at play here. In contrast to that, what you saw yesterday in the Democratic-controlled House of Representatives were centrist Republicans, many of them representing more suburban districts around the country, backing the $2,000 stimulus check measure. I spoke yesterday with Congressman Fred Upton. He is a Republican from Michigan, and what he told me was that he believes that this $2,000 stimulus check, it would help families that have been pummeled as a result of the pandemic on a host of different ways, not just and including the virtual learning additional headaches that have placed on millions of American families, but also on baby boomers who have had to step up in terms of providing childcare for other generations. So there's a host of different accounts that are being taken into for each lawmaker. But the final point that I would make here is that this is, as you somewhat alluded to, a marker of an issue to set up the next political cycle between now and 2024. As we hear from increasing amounts of Republicans talking about the $27 trillion debt, President Trump laid down a marker of sorts on populism by saying that additional funds are needed for middle class and lower middle class families right now in the midst of the pandemic.
Yeah, and you'll probably hear a lot of a lot of candidates out there touting these $2,000 checks. I'll remind everybody, though, that even George Washington, bought you beer and wine before you went to the polls. Kevin, I wonder what the other big issue that President Trump made a big deal about was the social media protections. He wanted protections stripped from big social media companies for things that their users posted. Is that just going in the corner to die if they veto or if they overturn his veto on the defense bill?
Absolutely not. And in fact, many of the Republicans who are coming out to support the overriding of the veto, which based upon my reporting, I fully anticipate will be seen across the finish line in the less than 48 hours. But many of the Republicans, like Senators Marsha Blackburn, like Senator Tom Cotton, they have all come out and said that Section 230 of the Communications Decency Act needs to be dramatically overhauled, that there needs to be a new type of conversation pertaining to big tech regulations. I contrast that, based upon my reporting, with how Democrats have argued that more regulation is needed for big tech companies in terms of breaking them up. Chairman Cicilline comes to mind in terms of his antitrust investigations. All of this comes at a time in which the Department of Justice, as well as state officials, have been looking at big tech companies and, of course, have brought in various lawsuits across the country for pertaining to them as well. So no one is saying that there doesn't need to be a structural change on big tech. It's just a matter of how they plan to do so.
Gotcha. And of course, who gets credit for it? Kevin, thanks so much for joining us. Kevin Cirilli there from Washington, D.C. For more of the market action, a lot of it driven by the stimulus out of Washington. Let's go to Bloomberg's Abigail Doolittle in New York. Abigail?
Hi there, Matt. Well, it's interesting because these $2,000 stimulus checks, the possibility that they could come into play because, of course, as you and Kevin were just talking about, the Democrats siding with President Trump. However, we still have to see whether the Senate will vote on it or will pass it, and it seems as though they are likely to block it. So I think that what we have going on here is more seasonal tailwinds. This is typically the time of the Santa Claus rally. We have had the S&P 500 up several days in a row, plus just the idea that there is support, whether it's $600 or $2,000, the American economy is supported. So with this, we have these synchronized all-time highs for the major averages. It's really pretty incredible. Let's not forget, we had a brief bear market earlier this year when the Russell 2000 actually was down more than 40%. Out of those March lows, though, more than a double, up 109%. That's the kind of recovery that we're seeing, because not just the support, the fiscal support, but of course the monetary support that we'll be taking a look at in a moment. And this really goes against the grain of this pandemic year. You would think that stocks would be falling, but that has simply not been the case, especially for some of the big cap stay-at-home stocks, the most momentum stocks. Tesla up nearly 700%, Moderna, Peloton, Zoom, all up more than 400%. And Matt, it really has to do with the Fed, as so many people are expecting, because if we take a look at the Fed's balance sheet, it has absolutely ballooned to, I believe, above $7 trillion. One of my favorite charts in the Bloomberg terminal shows the money supply and the S&P 500. Earlier this year, there was a big divergence as the money supply was going higher. The S&P 500 went this way. They've both converged, so here we go. Something to keep in mind, though, the Russell 2000 actually retreated from its all-time high yesterday, so some interesting divergences also to keep an eye on against all of this exciting background, Matt.
Yeah, but Tesla up 700%. I love it, Abigail Doolittle. The price-earnings ratio, 1,051 on Tesla shares right now. Let's bring in BTIG's Julian Emmanuel. we expect the rally to continue into next year. Julian, you're writing, quote, we see the S&P 500 at 4,000 at the end of 2021, despite the market being very overextended in the near term. Earnings growth is coming, financials are set to lead, and the history of years like 2020 tend to be followed by higher prices in the subsequent year. How can these kind of PE ratios, certainly nothing else is like Tesla, but we're looking at 30 on the S&P, continue for another 12 months?
Well, you really do need a confluence of things to go right. And essentially, the way the setup is, the base case is that the majority of these things will go right. Obviously, the public inflows, particularly in the options market, have been a very strong determinant of prices, certainly in the second half of this year. The public bullishness is a near-term concern, but in essence, when you think about it from a longer-term perspective, the fact that there's enough cash on the sidelines, the fact that a new generation of investors has come into the market and has actually shown a tolerance for pain, which is surprising, I think surprising to all of us professionals, really bodes well in this environment of negative real yields for further gains next year.
So does every family then take these stimulus checks, buy 2 or 3 Teslas, and then drive from Airbnb to Airbnb for the entirety of 2021? I mean, are you counting on, are investors counting on all the liquidity being pumped into the market that to be spent immediately by consumers?
No, and actually, if you saw, an incredible burst of spending, that's something that may actually take away from investment flows. So what we think is you're going to see gradual increase in spending as the economy reopens, certainly towards the second half of next year, as well as sustained inflows, perhaps on the order of what we saw after the last election in 2016, to guide stocks higher next year. But it isn't likely to be a burst. And frankly, if it were a burst that resulted in a further burst in the stock market, we'd probably get incrementally more cautious.
How much cash is on the sidelines then right now, Julian, and how much of it is going to come in via Robinhood?
Well, so if you look at money market funds, they have come off their highs, but the spike is incredible. And when you think about what the personal savings rate is, essentially in the teens, whereas over the last 10 to 15 years, that average was more like on the order of 5 to 7%. It really is quite dramatic. But again, much like what we saw in coming off of the lows in 2009, the cash is being used to supplement consumption in the present. And that's why, for us, part of this story of higher markets in 2021 is contingent on the distribution of the current stimulus and the market's expectation that you're going to get further stimulus above and beyond this $900 billion.
And so some of it, of course, is going to Bitcoin as well, Julian. I know you guys have a $50,000 price target for it at the end of 2021 as well. Julian Emanuel sticking with us. Kriti Gupta joining us now with a look at some of the stocks moving in the pre-market. Kriti, what do you see?
Well, Matt, of course, we're also seeing that defensive bid once again leading in the markets. A lot of this coming down to Apple. You can see those shares higher, poised to hit an intraday record. Of course, we saw it close at a record high just yesterday. Of course, shifting over to Alibaba as well. This is a company that's been dealing with a lot of antitrust scrutiny, of course, in China. So now they're coming out and saying, well, that Ant Group, that parent group, could actually be restructured to a holding company. So good news for the likes of Alibaba and, of course, other ADRs like JD, for example. Switching over to Nikola, that EV space getting another bid. An analyst over at JP Morgan saying it will see a less drama-filled 2021. Flip up the boards and look at the downside movers. You actually see vaccine makers taking a little bit of a hit as AstraZeneca could get approval over in the UK and, of course, nears a deal with Indonesia as well. That coming to the detriment of the likes of BioNTech, CureVac, and Moderna. Matt?
All right, Kriti, thanks very much. Kriti Gupta looking at some of the pre-market movers this morning. Coming up, a tumultuous 2020 is finally drawing to a close. Strategists taking their positions following an unprecedented year for global markets. That conversation coming up next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice